Hi, this is Anthony Parent of IRS Medic, and today we're going to be talking about drafting a non-willful narrative. Now, I want to just take us back in time to June of 2014. Oh, that was I don't know where you were, but I know where I was, guys. I was working away, and we had a whole bunch of clients who uh, really didn't do anything wrong, and the IRS had a one-size-fits-all approach, basically, to all non-compliance. Everybody had to enter into the massive offshore voluntary disclosure program, a program that was truly a designed for people with criminal intent. And the vast majority of people in noncompliance have no criminal intent. Rather, the tax code is so complicated, so onerous. And the United States of America is the unique position of the world as being the only country that imposes a worldwide taxation on people, along with a global reporting regime of your foreign financial assets. So in June of 2014 was a great day for us, though, because of all these clients who really were looking at a terrible outcome for themselves, were able to get some relief, especially those overseas who now would be entitled to zero penalty. If you lived in the U.S., your penalty would, I think at that point, we're looking at 27.5% penalty for our clients. The Streamline program dropped that down to 5%. Kind of a weird thing, too, because the IRS was saying at the time, hey, look, if you don't do this, you're going to get it you're going to get it bad. So you better use your offshore voluntary disclosure program. And then magically, they kind of changed their tack and came out with the Streamline program, I think for most reasons to help them. The IRS did this to help their own reason because they bit off more than they can chew. The IRS itself did not understand the intricate, difficult issues of taxation themselves, of international taxation, and didn't throw enough manpower at it. They realized they had a huge workflow they could not get through, but they couldn't really stop their compliance initiative. So they came up with the Streamline program, which certainly helped our clients, but also greatly helped the IRS. So part of every streamlined disclosure, though, is you can't do something intentionally. You could not have engaged in willful evasion of your tax filing requirements. You had to be non-willful. But the question is, what does non-willful mean, and how do you write a non-willful narrative that will pass muster with the IRS? Well, hey, that's what we're going to be talking about today, right? Because it's a big deal. And joining me today is the great Keith Redmond, the Consulate 2, an advocate for Americans overseas, American immigrants, and accidental Americans. Keith, thank you so much for joining us today. And Keith, you're going to have some questions for us, right?
Yeah, I mean, I just have a basic question, I think, before we get started. Obviously, I'm more focused on not the domestic streamline, but
Right.
the out of the country offshore streamline
Right.
program.
Yeah.
So my question is, from an IRS or perhaps a legal perspective, what is the criteria for non-willful versus willful?
Wow.
And um, what was the other thing I was going to ask? Who who makes that determination that it's non-willful or
Yeah. Huh?
willful? Because you can't get into people's minds. So is it based on actions or inactions? And that's number one. And then
Uh,
number two is with the offshore streamline program, have been cases where an American overseas has entered the streamline program
right.
and then stopped filing for a number of years and
Yeah.
then entered a second streamlined program. And so, how could that be considered non willful?
Well, we just did, well,
It's
you
a
know,
little
and we just did
confusing.
one of those. Yeah, Keith, thank you so much, because I think your questions can only be answered through this podcast. We're going to answer those
Okay.
questions, and we'll take them a bit by bit. And we just had a streamlined disclosure of someone who submitted a previous streamlined disclosure, and I could talk about how we drafted his non-willful narrative, because he actually was non-willful, and that's really all that's required. So we're going to get into it. And then of course joining us is the great John Richardson. John was helpful enough to create some slides for us to go over today. So we're going to get to those right now. Good morning to you, John. Thank you so much for everything we're doing. And this is what we're going to start off with. Here's the slides that John created, and really wonderful distinction right away, right off the top. And I think this is incredibly helpful for us to understand where the IRS really is, what they're trying to do. Okay. So one thing you need to understand is reasonable cause is not the same statement of non-willful. Okay. It's not the same thing. And oftentimes, and this is sort of the greatest problem that you have with the IRS, is that you have civil people who are civil agents who are not criminal attorneys. They're not civil attorneys. They didn't go to law school. They don't understand what negligence is. They didn't take a semester on negligence. They didn't take classes on what states of minds there are. So what we often see is a convoluted mess and things not getting right. So let's focus first on reasonable cause. Reasonable cause is actually, in my mind, and John, you can help me out here, but in my mind, in my lawyer mind, when I think of reasonable cause, that is a higher standard to try to meet for a taxpayer than being non-willful. To establish that one has reasonable cause is actually is a harder row to hoe than saying you're non-willful. John, do you agree with that?
Well, okay. So we're talking about non-willful in the sense of streamlined non-willful, right?
Right.
Okay. Yeah, absolutely. The reasonable cause standard and availability has been around, forever, right? And you'll find all kinds of sections in the Internal Revenue Code, that begin by opposing a penalty, and then, it can be abated for reasons of reasonable cause,
Right.
et cetera. And it's defined in different ways. But when people, one of the aspects of reasonable cause, obviously, would be whether somebody was willful, et cetera, right? And what has happened is, I think that the requirement of non-willfulness and the streamline has confused people, making it think that these standards are related when they're really not. I think that it would be better to not think of non-willfulness and streamlined as non-willfulness. I think it'd be better. Why don't we just adopt a different definition? Let's just call it the eligibility requirement to use streamlined.
There you go, man. That is kind of a
Much better way to put it, because we'll get to it in a minute, but you'll see that it's so incredibly broad. All right, that it would include all kinds of things that I think could never meet the reasonable cause standard outside streamline.
And so, yeah, and this is what the IRS does, and this is where I think people get very confused on these penalties, because what the IRS will do oftentimes is they'll assess a penalty. Oh, we're going to assess a 3520 penalty on you. We may not really file any deficiency procedure. We just automatically may send you out the notice, and now it's up to you to argue that no, I had reasonable cause. So that's the dynamic and how it works generally. So that's when we're talking about reasonable cause. But when we're talking about a streamlined disclosure, we really should not be concerned with reasonable cause. But yet the terms get so conflated by the tax industry and people who are not paying attention. So that's what we're going to sort of dispel here, to make sure we're going for the right standard. Because oftentimes, and this is what I think probably our biggest complaint that we have, is so many people in the tax industry are scaremongering people to say, well, you're not really non-willful because look at this. And so we'll go through it, and I'll give some examples of people who are non-willful.
Yeah, Anthony, one of the things about the definition of let's in fact agree in this podcast to not call it the non-willfulness. Let's call it the eligibility requirement.
Eligibility, right?
That's
much better.
That more accurately describes it.
Right, and that sort of and that is a better distinction. If you say eligibility requirements, now we're not going to conflate so much those terms.
Yeah.
So
you don't automatically get sucked into the vortex, of what's the opposite of non-willful, willful, and what does willful mean? Well, it might mean recklessness. It might mean, sort of a specific intent standard if it were criminal law. It might mean excessive negligence, right? In other words, you're thinking about the wrong thing, right? If you're doing a streamlined. These are things you think about outside streamlined in another context. However, I will say this, that when I write eligibility statements, I try to write them in a way that will support reasonable cause if necessary as well. All right. And most of the people I know who do this kind of work, like who've done a lot of this kind of work, will generally attempt to do that. Okay. So that if for some reason the eligibility thing doesn't clear the hurdle, so to speak, right? Then you've at least planted the seeds for reasonable cause. And one of the problems here, right, and why people need to be careful with this stuff is to not put things in the eligibility statement that could undercut reasonable cost later, right? If it's needed. So, I mean, I appreciate that almost no thought goes into these things, generally in the world. And that most of these are done by tax preparers. But, the trouble is that there's really no small trouble, right? If the trouble begins here.
That's a great point, right? And it's something where I would say, you don't necessarily want it written by just a tax professional, especially when you have a difficult one and uncomfortable facts. There's a way to handle bad facts. And really, I started my career as a criminal defense appellate attorney. And so I would have, cases that, okay, the facts weren't great, right? The facts in this, the facts for my client weren't great. Like, I'll give you an example. Bad facts include breaking into old people's houses and murdering them and taking their stuff. That's a bad fact. That's a bad fact. and you're truly. And so how do we minimize that? How do we, accurately say what happened, but also try to leave some room for some understanding, understand like, hey, there was, hey, look, he didn't have the mental capacity. He was, So, we always work with the things like, okay, we have to address the bad things, but let's do it in the right way. And this is the thing that is most important that I learned. What I learned very quickly on in the very first appeal I ever got, you win on the facts. You win the facts. The law just supports whatever determination the courts really wanted to come up with.
There is no law here. There is no law. I think that's part of the point, right?
Yeah.
Streamline is not based in law. It's just some junk. I don't mean that, literal sense, but it's just something the IRS put together.
Well, John, you had the best explanation of it the other day, earlier this week. You just said, well, it's a predetermined. What was you had? It's basically a private letter ruling that we agree to treat you.
What it is, it's advertising an agreement of no penalties for Americans abroad and a 5% thing for domestic filers, right?
Right.
So here's my question, gentlemen, and specifically on the offshore Streamline program. What are your thoughts of Americans overseas doing their own Streamline program themselves and writing up what they need to write themselves? What is your thoughts on that? Because it does happen.
Anthony, you answer that. I'm not even going to answer that.
I would
bring it
really,
up intentionally because I see so many who do that. So
yes. So okay. Well, here I'll answer the question. Because somebody had to write the first reasonable cause.
Mm-hmm.
Okay. So I remember writing our first, or I'm sorry, and I said an eligibility requirement. Somebody,
eligibility statement.
Your eligibility, yeah. Somebody had to be the first one to do it, and and I was one of the first to do it. I'm looking at what the requirements are on the screen, and I'm following them, and I come up with a template that I intend to use again and again and again and again for all my clients. So I wasn't just creating my first eligibility statement for just one person, but I was imagining a whole bunch, and so I created a template that my firm has been using for 2014, and we've never been questioned on one of our eligibility statements. Never has happened that we're able to do them in a right way, and so our clients never get anything questioned, or as far as I know, they did nothing. Nothing's happened. They all go through. So I would say it seems like there's a lot at stake here. I mean, the whole point of doing this streamlined disclosure is to eliminate the fear and stress of potential penalties. And you might be doing something that you might be disclosing something. There's ways to handle bad facts, and there's ways to accentuate the good facts, right? And that's what you're trying to do in the realm of being truthful, right? Here, the general rules. Here's the rule. Rule number one: you need to be truthful. Number two, you need to maximize your good facts, minimize your bad facts. And sometimes minimizing bad facts just is deleting. just leave something out. That's often your best tool. Is just like, you know what, we'll just delete that sentence right there. It's not relevant. We don't need to know that. So that's one thing. That is what I would say. So I would say it is. It just seems rather not prudent. The whole point of doing this is to make sure that you don't have worries, and your knowledge of one, which is yourself, or maybe you have a friend to do it. It's not the same knowledge as somebody who's done thousands of them. It's not the same. It's not the same
bottom
level.
line is, it's a bit foolish if you're taking the time to do the Streamlined program. It's a bit foolish to do it on your own.
Do it right or don't do it at all. Right. Yeah.
Right.
Don't. And I mean that. I mean, don't do it at all. If you're not ready to do it right because of consequences of, and this is the issues that, we're now reviewing a lot of streamlined disclosures that were made that were improper. So we're redoing streamlined disclosures for people that came in, had someone else do it. And by the way, not too many people have done it themselves that I encounter. I have actually not encountered that many people who have tried to do it themselves.
I've encountered a few, believe it or not, and I've seen in some of the Facebook groups where people have said, I'm in the process of doing my Streamlined program myself, blah, 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 blah. I've seen it on Reddit. I've seen it on Facebook, and it just makes me question why.
Yeah, well, and I would just say that the bigger problem with that is that, when people call us about, I want to enter the Streamline program, entering the Streamline program, I got to do it. Well, we talk through the issues, what they really have. And I would say it's about 50% of the people who are calling me, I have to do this Streamline disclosure. I know it. Or they might even been told they needed to do a volunteer disclosure, which is nonsense. But about half the people we go through and we analyze their facts. No, actually, you don't need to do the Streamline program here. You need to do this. Yeah. So I would say probably the bigger problem that people are doing when they're writing their own eligibility certificate is that they're probably missing some key analysis on what actually they need to do. So that could be the bigger danger. So you're entering a program you don't need to, and there could be consequences. So I would not say that's a great idea to do, but and okay, so we got a question. We'll get to we'll definitely hit the AM. But really appreciate the question here. Does the second part of the definition of non-willfulness, i.e., that is the result of good faith misunderstanding, modify each of the four types of non-willfulness? That's great. We're going to get to that. I'm going to bring that. I will bring that comment up when we get to that. So thank you very much. And by the way, anyone you got more questions, please ask them. We want to address all questions that are going on. So right here, the Boyle decision, and we got to move along here. We got some things to get to. Keith,
let's get out of reasonable cost. It's not the same thing. Okay.
Yeah. So we can blast through that. Okay, great. Here's Treasury regs on reasonable cause. We don't need to worry about that. Let's get into the non-willfulness statement.
Let's start with the way they define it, because I think that'll answer a lot of the questions.
Yep.
So non-willful conduct is conduct that's due to negligence, comma. The reason I say comma is I'm addressing the comment on the screen a minute ago. Inadvertence, or mistake or conduct that is a result of a good faith misunderstanding of the requirements of the law. Now, there's four heads. Yeah, so the answer is no. Okay, there's four heads to this, right? And this is why I would not use a template for this, okay? Or if you are going to use a template, you need to have four templates, because you have to decide, what your theory of the eligibility statement is going to be, okay? Was the conduct, whatever brings you here today, was it because of negligence? I appreciate that that's not a defined term, okay, but notice it doesn't say gross negligence.
Right.
Inadvertence, story of my day-to-day life, I think. Okay, or mistake, that's the result of a good faith misunderstanding of the requirements of the law. I was mistaken about the law. Or conduct, right, that is a result of good faith. I mean, those are, arguably separate things, okay? Now, I don't think you can read that and know what it means. And I think that's part of the point, right? But it does seem to me that it would appear to exclude anything that be willful in the traditional sense. I want you to notice also the focus is completely on the taxpayer there, right? None of anything that they were doing with an advisor or something, at least in that definition. And that is sufficiently broad. Okay, I think particularly the word inadvertence to allow people to use streamlined who have filed before and stopped filing. I'm not recommending that as a strategy. I think that if people use streamlined to come into compliance, I think they need to assume they're doing it forever. Nevertheless, U.S. tax compliance for Americans abroad is so incredibly difficult that there are plenty of people who have used streamlined to come into compliance, fallen out of compliance, okay, even though they're not supposed to, or have been filing, not even coming into compliance under streamlined, stopped, and use streamlined to come in. Now, I'm not recommending all that as a course of action. I recommend that you just try to, stay on course with your filing. But I'm just pointing out that, that's a very, very broad definition, right? It's a very broad set of circumstances that seem to me to allow you to clear the eligibility hurdle. Okay, and I have, done a wide variety of these things for many, many different people. Interestingly, it's always easier if they've never filed before, right? Always. Because one of the problems you've got if they have filed is to explain why they stopped, okay, etc. It's almost as though, when it comes to this type of stuff, no good deed goes unpunished. It's also interesting that to use this program, you have to have omitted income from a foreign financial asset. And I remember having a discussion with somebody, who had been filing, was trying to fix compliance. The idea was that we were going to try to use streamlined. And I said, well, where do we have unreported income, right? And he, of course, didn't know because most people don't know. So somebody do their returns. And I saw an email that he sent to his CPA or his accountant who did the return and said, where is my unreported income? Apparently, I can only use the program if I haven't reported. I can't use it if I have.
Yeah.
I mean, just recognizing the total idiocy and, of this whole thing. But it's definitely not one size fits all. And I think that these people, I have not, I've never personally helped somebody put one of these things together where it was rejected. I never have had that experience. The ones that I know that have been rejected have been sort of, one sentence, I didn't know I had to file type of stuff, right? That's going to give you problems for reasons that we'll get to, but anyway, yeah.
Yeah. So, and this is the way that I look at it. So, here's kind of my way I think about non-willful conduct. What do we mean by that? Well, my criminal law background pops up. And by the way, non-willful versus willful, that is a term that we get from Title 31. That is not a Title 26 standard of mindset anywhere. You will not find that in Title 26 anywhere, but rather you'll find non-willful versus willful in the scope of Title 31, and specifically related to FBAR penalties. And I've discussed those at length and how there actually might not be any legal basis to impose with FBAR penalties regards. But that is sort of the thing I'm looking at, non-willful contact. Well, if I think about that, and as we know, the FBAR is a criminal form. You have a criminal form that a civil tax agency is assessing the penalties on, which is completely inappropriate because they are not experts in determining what criminal conduct is. Regardless, non-willful. So non-willful, when I think of non-willful, I think of specific intent. You meant to do that. You meant to do what you did. Anything other than intending to do that is non-willful. Now, confusing the matter is that the IRS has a standard called, well, willfully blind. I look at that more as just inferring the person's state of mind based on their conduct. I don't think that really changes the standard. It's just a way to prove it. And again, we have to prove what's in someone's mind only by circumstantial evidence. That's the only way to do it. We can't scoop inside someone's mind. We can't take an MRI of it to see what they were trying to do, but rather we can only infer it from their conduct. So in my mind, when I say non-willful conduct, okay, basically anything you didn't mean to do on purpose. That's the way I read this. Now,
No,
okay.
let me disagree with you on this.
Okay. Let me hear why.
I don't know, this isn't right or wrong, but here's the way I'm interpreting what you're saying. So, anybody with a background in criminal law has spent a lot of time thinking about, we have 50 shades of compliance, 50 shades of tax residency. Why don't we call it 50 shades of intent now? Okay.
Right. Yeah. That's kind of what we're,
Sort of a spectrum of intent. But here's the thing. I don't think that has anything to do with this at all. Other than that, if you clearly intended, if you had the specific intent, then you're not going to be able to meet this standard. But
right.
I would keep that stuff out of it for this purpose. And, this definition is so broad that that I think it could include reckless disregard.
And that's my point, that I think it can, that it includes recklessness.
Okay. All right.
That's exactly what I'm saying. I should have clarified that first before but right. It includes recklessness. Like, yeah, I guess I wasn't paying that much attention. All right. I guess I should have known.
But let's close our eyes and put this more in people talk. Okay.
Okay.
Look, the way I kind of read this is, are you more or less in the same category of millions of Americans abroad who screwed up your tax filing?
Yeah,
so
right.
That's how I kind of view it.
Yeah. Are you just like everybody else with foreign income and assets?
Yeah,
that you don't get it right.
Can't comply. Compliance is impossible because one, we don't even know what it means. And two, even if we did know what it meant, we would have trouble meeting the standard. Okay. I don't think that the eligibility hurdle here is huge. And I think it's broad enough and elastic enough to include all kinds of people who, if this were reasonable cause type stuff, would never be able to meet that test, right?
Well, and here we got AM's giving us another great question. I want to just get to this now because it brings up of something that I think is really critical, because when we think about non-willfulness, we're often thinking about state of mind, but criminal law, we have the mens rea, the mental part, and then the actus reus, the action. What's the action? Here's something that comes up like, well, I wanted to file, but it was impossible for me to file. I was sick. I was in the hospital with a coma. That comes up. Civil unrest, right? You could have something in the country where you're living, like, hey, we didn't have internet. Yeah, no, there was things going on there. Nope. I was actually kidnapped. So yeah, I didn't really have access to my tax professional, and all these other life circumstances that can get in the way. And so that's where I would say is that you have to have, otherwise, because you're trying to do something, you can't do something. That's not willful. I was impossible. And that's the thing that we're seeing more and more of. People like, well, no, I knew how to do it, but I was out of the country. I lost my records. I lost my tax professional. That's a big one.
You don't even need that. Look, this is broad. I'm not recommending this, but this is broad enough to include people who knew they had to file. Okay. And didn't for any of a number of reasons.
There you go. And that's the point we're trying to make here. If you, right.
This is why I think it's really dangerous here. I mean, I have a background in criminal law in a past life, and so I spent a lot of time thinking about these kinds of things, but I don't think that this stuff has anything to do. This is why because of the amount of time I've spent thinking about. In law school, I had to write a major paper to graduate, Anthony. It was on impossible attempts. Okay. I mean, to give you a sense of the degree to which I was into this stuff at one point in my life. Okay. But, because I spent so much time thinking about, criminal law and mens res issues, that's why I feel so strongly that it's only marginally relevant to these eligibility statements. And I think it's a mistake
Oh,
things to get into that in a big way. I mean, I know that part of the problem is there's no manual for this, and I've seen
right.
people write these statements, and they're incredibly legalistic. They're busy citing case law, probably cases like Boyle and stuff like that. Um, but I don't think that has anything to do with this, because of the definition. And I would encourage people. You know what it's more like? It's not a legal brief. It's more like writing an admissions essay for law school. Okay, where you're yeah,
Yeah.
you're
Yeah.
talking about yourself.
Or what I would say, it's the facts part of an appellate brief. The hey, facts and circumstances. It's that. It's not the legal part of the brief. Don't do that.
That's exactly right. But for no other reason but that this isn't law,
Right.
right?
Right.
Well, just think of it as an admissions essay for law
There you
school.
go. That's beautiful.
Now
That's
that's
beautiful.
now that doesn't trivialize it at all. Okay, I mean it requires a different kind of work,
Right.
but just as much work. But I think that if you get into a bunch of reasonable cause analysis and case law and legal conclusion, I think you're completely missing the point. I mean, you want to be able to describe a situation that is completely consistent with what we know to be true of Americans abroad, which is they don't understand their filing requirements, and even if they did, it would be difficult for them to meet them. I mean, I think that's fundamentally the predicate here.
Yeah.
Now, it may not be that way forever, though. Okay, and here's what they say. I mean,
Yeah.
this is interesting, right? So they say provide specific reasons for your failure to report all income, pay all taxes, submit all required, including F-bars, include the whole story, including favorable and unfavorable facts. Specific reasons, whether favorable or unfavorable, should include your personal background, financial background, and anything else you believe is relevant to your failure to report all income, pay all tax, submit all required, including blah, blah, blah. Here's some stuff that's interesting. Explain the source of the funds. So here you are.
Yeah.
You're an American citizen born outside the United States. All your accounts are in Bulgaria or somewhere making up a country. What is the source of your funds? Well, it's like life in Bulgaria, okay? Did you inherit this? I mean, most of this is just,
It's weird you mentioned Bulgaria. I had
what I would do here, what I always do is just include one short paragraph that says this, okay?
Yeah.
Yeah, well, I have lived either all my life or since I was, 15 years old and in Canada, haven't lived in the United States since, have no U.S. source income. Number one, all of the financial accounts I have of any type are in Canada. I have no financial account outside the United States. Two, I have all of my accounts are personal. I do not have a small business corporation, a trust, or any other kind of entity. Three, the money in my accounts or asset comes from my employment and from time to time small amounts of investment income as reported. That's it. Okay. You just close off, the whole notion of, oh my God, this is somebody, the guy was probably born outside the United States, open accounts to hide them from Treasury, right?
There we go. Yeah, right. Yeah, it's a conspiracy. Now, John, I think one of the things that Keith was getting to, and we didn't get to. Keith had to step off, by the way, for to attend to something. So we thank him for his attendance. And one of the things that Keith was trying to get to is, well, who certifies this? Who's going to certify this? How do I get a certification of this?
You sign it. You sign it. The taxpayer.
Essentially, it's a self-certifying statement. You're the one who certifies it. Right?
Self-certifying statement. And I would add that, I mean, I think that I think people should get help on this. I really do, because of the importance of it. But it is their own statement. I mean, normally what I would do is, begin by explaining what this is about, what we're trying to do with it, why it's required. I would have a discussion to develop, the general progression of the thing. And I would send it over to them and say, look, thing is that this isn't mine, it's yours, okay? And you got to sign it. So, if you feel, if you want to commit to this, okay. If you want to make any changes, let's see what they are, etc. But I would also add the following piece of advice. Do not put in anything that is in any way disputable. Okay. So, for example, you don't want all my financial accounts are in Canada when, in fact, you have, you're a snowbird and you have a bank account in Florida. Then you're going to say all of my accounts are in Canada except for one that I have in Florida because I spend a couple months a year in Florida. In other words, you want absolute accuracy on it.
Yes. That's absolutely right. Yeah. What you definitely don't want to be, you don't want because, and I think one of the things is that we don't know, when this might become relevant again, because essentially, if you think about like this, that okay, you do your streamlined disclosure, years go by, and the IRS selects you for an examination. And now they're trying to say, now they could use that statement to say, well, hey, you said you knew all about this.
Anthony, this is exactly right. This point you're making. And I am not, I think, in the last podcast, we came up with the phrase streamlined if necessary, but not necessarily streamlined.
Right. Yep. Yeah.
I would explore other compliance options.
And that's the number one problem that I see is people just assume, and Keith's statement, this is one size fits all. Hey, I'm not in compliance overseas. I have to do a streamline. And then I did a streamline once and now I'm in compliance again. I can't do it again. And so that's really the bigger problem.
Well, that's what they say, right? That's what they say. I was going over the rules on that. I'm understanding them. I don't know that they necessarily apply that or not. I seem to have a memory trace of having helped people do a second. I've
done it. Yeah. Yeah, no, you could do it. It's again, inadvertence.
Yeah.
Inadvertence. Yeah. Yeah. You know what? It's really hard stuff. And here, this is the biggest problem that I have with streamlined disclosures, and I would say actually doing them is that clients that tend to live overseas tend to need our services because of their foreign financial assets, tend to be very intelligent, very hardworking people, very honest. And so the problem they have is they're being over thorough. And they're indicting themselves, and they're not giving themselves any understanding that there's like, no, I should have known all of this because I'm smart, and I how could I not know this? I know everything. I don't make mistakes like this, and they're not willing to give themselves any forgiveness whatsoever to say, by the way, this is so incredibly complicated. And as we've gone through on this channel, we have gone through and explained how many things that the IRS does, many things the tax industry does, are actually not supported by the law. We've gone through and explained very many times, hey, a foreign mutual fund, you know what? That's actually not a PFIC on its own. It's actually not. And a foreign pension, is that really a trust? Maybe not. There's so many areas where there's so much confusion. Oh, by the way, is there any authority to assess FR penalties? Maybe not, especially after Loper Bright. So there's so many uncertain things the IRS has yourself, and you're not going to even allow yourself a little bit of you're like, oh yeah, I guess, you know what? I'm human. I wasn't 100% perfect. I got it wrong. Why can't you just admit that? Oh, I'm not perfect. And I think that's something that a lot of people miss of themselves. They expect this perfection everywhere they go. And they expect perfection in the tax code, which I'm sorry, is kind of impossible. And I think intentionally so.
Well, the fundamental differences, I think we decided in the last few podcasts between the U.S. thing and other countries is that the U.S. operates on sort of a definite penalty for indefinite conduct.
Right.
Other tax systems.
Thank you, John. Yeah, and your next slide, John, is perfect for this.
Conduct, right?
Yeah. And John, I think your next slide is perfect to demonstrate exactly what we're talking about here. So here's the and by the way, this is the thing too. I would say anybody has a non-willful is non-willful for FBAR if they looked at the law. If you looked at 31 USC 5314, if you read that, you would never conclude in a million years that you have to report a foreign bank account worth over $10,000 in the aggregate. You would never conclude that. The language of the statute itself doesn't alert people that there's an FBAR obligation. You have to go to you have to know this is essentially the truth. You have to know it's like, okay, here's this law, but now that says this, oh, wait a second. I know this is a law, but I know that regulations can completely invent something entirely different. So let me ignore this law and go to the regulation. There in the regulation, you'll find where an FBAR was created from the regulation, but the statute did not create an FBAR. Right. And so all of us were like, well, look, okay, so you're going to say your regulations can preempt the statute. Fine. But you didn't give notice of that. You didn't give notice of that. So in my mind, everybody like, yeah, why were you non-willful? Oh, I looked at the law. And it didn't say that. It said something about reporting foreign agency import and export of foreign agency transaction. It actually said that the Treasury Secretary had the obligation to create the form for this. And I'm not someone who can create the form. So I looked at the law. That's my reason why. That's my reason why. I looked at the law. I didn't think it applied to me. Now I understand the regulations modified the law, and I'm subject to the regulations. But here, your example here is, taking a look at how would someone know? Here, you have a section of the U.S. Canadian U.S. tax treaty right here, and pension type things. So if someone read this, John, what would they assume their tax obligations be?
I don't know. Nobody can understand this stuff.
Right.
I think what they would understand is that if they have a pension in Canada, that the U.S. is not going to be taxing the growth of the pension. The U.S. will tax it when it's distributed. That's what it says.
Right.
Okay. But the reason that this is important, okay, is because remember that we go back to the whole jurisdictional thing of, to be eligible to use the program, you have to have failed to report income from a foreign financial asset. Right here we have, let's say a pension is a foreign financial asset, which it is. But here we have a treaty saying that the income is not reportable, is not taxable, right? Now, this is kind of interesting to me. I actually saw this in a new light last night when I looked at this, and then I looked at this 2014 notice. I don't want to get into the technicalities, but it just shows you how ungodly complex this whole thing is. And, for people in Canada who are doing Streamlined, your eligibility statement probably should include a reference to this, okay, that, to the extent that you have a pension or something like that, that it's carved out, under the treaty. But the reason I put that in there is because the FAQs on this thing, there's like out of 10 of them, something like 3 of them talk about Canadian pension plans. So, I mean, they're going upside down, sideways, and diagonally to make it clear that Canadian pension plans are not a problem for people, interestingly. But again, the reason that that's there is because it does have some bearing on the way the eligibility statement would be written for somebody in Canada versus somebody, say, in Australia, okay, where you don't have that kind of, treaty provision, right?
Yeah.
But look, the bottom line is, I think this, okay, that I think the bigger question, I think most people can manage the eligibility statement, okay? The bigger question, though, it seems to me, is do they meet the requirement of not having reported income from a foreign financial asset? That's the bigger problem, because the way they appear to be defining foreign financial asset for these purposes is something that either goes on an FBAR or a Form 8938, right? And, so question, would the sale, let's say you're in Canada and, you've sold your Canadian principal residence, which is tax-free in Canada, and then all of a sudden, you read something in the paper that says, "Oh my God, as a U.S. citizen, I have to pay tax on the capital gain from the sale of my principal residence." Well, what do you think, Anthony? Would the failure to disclose that capital gain meet the test of failing to disclose income from a foreign financial asset?
If it's real estate, it would only if it's held in the entity's name.
Yeah, I
But
think that's right.
yeah,
In
yeah,
other words, the answer, I think, is no.
right. It's not.
So now I have no doubt that all kinds of people, have used Streamline for that kind of purpose. But it was kind of interesting going over this last night and giving it a second look after so long. But I really got to say that sure the certification statement is an issue, but I think that people need to be much more careful with whether they really do meet the eligibility requirement for
Yes.
this program or not.
Right. Right. And that very good, because again, I get, about again, half of the people I talk to don't actually need it as we go through it. And here, I think your real estate's a perfect example of this, John.
Yeah,
That
it's more than not needed. It's they're not eligible for.
you're not right. You're actually not eligible. Yeah.
The situation where you file all this stuff and you report $1 million of capital gain under Streamline. You're not eligible to use Streamline. Okay, what you've done is you just alerted them to $1 million of unreported income that, I don't think on my reading of this, I mean, maybe nobody pays attention to it and it just goes through, maybe, okay? But my reading of this is that, that a capital gain from the sale of a foreign financial asset, so from something that's not a foreign financial asset, doesn't meet the test.
That's right.
Maybe I'm wrong. I don't
know. John, this is what we've been doing. Look, and this is really the confusion here, because real estate that you own in your own name is something that does not go on at Form 8938. If you're renting it out, that income goes on. You typically, we'll see that on Schedule E. Okay. There's no penalty for not filing Schedule E. The reason why you're entering into the Streamlined Disclosure is not because you're at threat for criminal prosecution. No, because the IRS doesn't have the resources, and a jury would be incredibly confused by this.
Clean up your act with no outstanding issues and moving forward.
Your job, the reason why you're doing it is to limit your future penalties. But if you don't have the penalty exposure to begin with, what are you doing? Why are you doing something that would only increase your penalty exposure, right? I would say this, and this is the problem, and this is really the problem I have. I have a case right now I have to reverse this on. We did a delinquent informational return on someone who had a 3520A maybe obligation. We did okay, you want to do it? Sure, we'll do it.
And they automatically assess a penalty.
Yep, of course. And it's like, well, would he have been assessed that $10,000 penalty if he didn't file that 3528? No, never have been. So I'm going to the unit that did this. I'm going to have some words with them to explain. Okay, look, if you want people not to follow what you're on your website, do this, because I'll make sure I don't believe one friggin' thing you say. You said if people do this, this is the treatment you get. But you idiots, I'm sorry, there's too much to do. It's too much to ask. You want to it's amazing. They want to automatically assess $10,000 penalties with no notice to the taxpayer until the penalty is assessed. Oh, we assessed you a penalty. Yeah. Okay, well, did you give me an opportunity to respond? No, but you can argue reasonable cause now. Yeah, go ahead.
All you have to do, let's not get overly technical here. If you know it's going to Ogden, Utah, a penalty will be assessed. Okay.
It is Ogden.
And really, it's practically reached that point.
Yeah.
Because that they process all the 3520 stuff, right? And they appear to be in a situation. They appear to be, unless they've, really cleaned up their act. Not looking at legal cause, just assessing penalties, and it's up to you to try to abate them.
Yeah, no, and you would think, and you're right, and maybe Ogden deserves its own special podcast, because they've done some comically absurd things that they've taken 3 years to get off, like assessing a 3520A against someone who has no trust. That's a common thing. They didn't even have a trust. Where's the thing you're saying is a trust? Oh, yeah, oops. Okay, well, maybe you want to revise your process, so that you're not sending ruinous penalties without any freaking basis whatsoever. You'd think they do that, but no, Ogden is still doing it. So you got to watch out there, and that's why we do
The problem,
our
Anthony,
clients.
is that the rules are so complicated. They're complicated, but to try to apply them to stuff that's not U.S. based becomes almost
Yeah,
impossible.
yeah.
So, I mean, it's just an example of, nobody understands what the law is. Nobody knows how to apply it. The only thing that's certain is the penalty. Remember our principle: certain penalty for uncertain conduct, or what do we say? Definite penalty for indefinite conduct. I mean, that's where we are with this.
Yeah.
But by the way, but on this note, okay, this is the real benefit of Streamline. Okay, I don't want to talk this down too much, because where you use Streamline and where it's incredibly helpful for people is when you have exposure to a lot of information return penalties, right? Okay, like 3520 things, or 5471. And that really can be valuable. But I mean, let's say you're in a situation where, you just haven't been filing returns, but you don't owe any taxes, and there's no independent basis for levying penalties for information returns. I don't know. I mean, you could have unreported income. What could you have? You have, for example, a situation, right, where you might have income from a TFSA, but because you're using the foreign earned income exclusion, it was less than $12,000. You're still below.
Yeah.
So you would have. So here's a situation of no tax liability period. Yeah, unreported income. I don't know. What would I do on that? I would not. I think. I don't know. I would not get into the Streamline, particularly with a TFSA, which is not a trust anyway, right?
Yeah, well, you're bringing up a great point. I mean, this, because there's something that we got to cover, and we're going to get to it right now. And really, oftentimes, the difference between, oftentimes we talk about, U.S. expats, so we're focused on the SFOP, the Streamlined Foreign Offshore.
Yeah, let's look at the domestic.
But the domestic is really interesting, and I want to give an example we have a client who oh, Anthony, I need to do the Streamline program. Okay, all right. Why? It's like, I have some, I own some stock, and it's had some income. Okay, all right. So we're going through it. Oh, yeah, my stock is worth a lot of money. Oh, all right. How much? Oh, a lot. Oh, millions. Okay. Did you and you don't have the unreported income? Yep. Okay. Now here's the thing. Here's the critical thing. Is the stock ownership something that needs to go on an FBAR? The answer is no. It doesn't go on an FBAR.
Okay, but it goes on an 8938.
Goes on an 8938. So here's somebody who, he lives in the U.S. So if he does the Streamlined Domestic Offshore Program, it's going to be 5% penalty. He's essentially looking at $1 million penalty. That's kind of where it's at.
Yes, well, 5% of the value of the stock.
Right, which would be $1 million.
Yeah,
So in his case, I said, well, let's talk about this. Like, well, if you do the Streamlined Domestic, you have $1 million penalty, but what's your penalty exposure if you do nothing? We could just say, well, you have no FBAR, so there's no 50% of account value. All you have is an 8938 penalty potentially from the date of acquisition of your stock. Let's add up how many 8938 penalties you could be assessed. We added them up. It's 9. Okay, $90,000 of penalties. Okay, there's going to be penalties and interest. Let's just double that to say, okay, your penalty exposure could be $180,000. You've done nothing criminal. So what's the point of giving the IRS $1 million? That's less, it's more than what your penalty exposure is, for crying out loud. So
that can often be the case. Absolutely.
Right.
And this is why, I think that I really, the longer I do this, the more, and, the longer I do this, I have a couple of thoughts. I mean, one is that that one can be nothing more than a permanent student of this, right? I mean, last night I reviewed a bunch of this stuff, for this morning, and, I saw it in a somewhat different light, perhaps, or, it just gave me, reasons to think about this differently. it's more like you look at your options. It's more like a chess game where you decide you're going to move this piece, you're going to move that piece, and what are the potential costs. But I think that people need help. I think they should get help. Whether they rely on it's a different thing. But I'll say again that I think it's very, very helpful for people to have an objective discussion with somebody who understands this before they go to a tax preparer.
Yeah.
Because, I mean, there are exceptions, but generally speaking, uh, it takes time to analyze somebody's situation and patience and a clear mind. And most tax preparers are not really going to do that.
Yeah, no, it's a different. It is sort of can be a different mindset. So and I want to get to this because I think it's pretty critical. Some different. And I bolded this. The requirements for the domestic streamline. Okay, and here's the whole.
This morning, right? They're saying,
Yeah, this is what you sent this morning. Yep. Okay. So all right, and I'll have them side by side to make it easier.
yeah, it's interesting. They are slightly different, aren't they?
Right. Yeah, I know. Right. And then this is where it is here. But now I put it on this side where we can compare them side by side. Okay. Whoa, we have a lot less text in the foreign one than the domestic. So
Yeah, well, let's go over this and try to decide let's start with the foreign. That seems to me to be clearer and easier. So you failed to report the income from a foreign financial asset and pay taxes required by U.S. law. Let's start there. Okay, so foreign financial asset means something that would go on. We know from later on something that would go on an FBAR in a Form 8938. So it's not real estate.
right.
And pay taxes required. Notice that says and pay tax.
Right.
So what if you haven't reported it, but it wouldn't make any difference if you had reported it, right? You wouldn't have to pay tax, right? That's an interesting issue, isn't it?
Right. And that often gets into where, for people foreign, we don't get into that too much. And I'll let you get, we'll talk about that in a second, but yeah, keep going, John. Sorry. I'll talk.
Yeah. So that's an interesting problem. I mean, what if you don't owe any tax? Again, my DNA on this stuff, okay, is this, that unless there's clear penalty exposure, I would look for ways out of this that don't involve streamline and having writing the statement of non-willfulness. But let's compare this to the domestic. And it is different, but let's figure out what the differences actually have failed to report. And notice here it says gross income. It did not say gross income under foreign. Does that mean it could be net income? What does that mean?
Yeah.
There's a difference there, right? Gross income from a foreign financial asset and pay tax. Okay. And pay tax. All right. Then they go on. Notice that the inclusion of the discussion of all these information returns, right? And it says, let's say, may have failed to file an FBAR, okay, and or one of the international information returns with respect to the foreign financial asset. All right. It seems to me that okay, the domestic is far more specific. Okay, that's for sure. It's far more specific.
But I'm actually trying to, I'm going through my mind and I'm actually trying to see where there's a substantial difference. I said, okay, they've done, I see it's written differently, but because, okay, the first part that's different is domestic has gross income.
Yeah.
And then foreign has income.
Yeah, I don't know. I mean, does that mean net? What the hell does that mean?
What does that mean?
Right?
Yeah. So okay, that there's a distinction without a difference. I
Let
think.
me tell you what I think that the difference is rooted in part. And I'm just speculating here. So one of the key differences between the foreign and the domestic is that for the foreign, you never had to have filed a U.S. tax return. Okay. In other words, this can be for first-time filers. For the domestic, as I understand the requirement, you have to actually have filed returns.
Right.
Okay. And perhaps that provides an explanation for, so much more definiteness in the domestic.
Oh, okay.
No, I suspect it may. And then, of course, the final difference is the imposition of that 5% penalty.
Right. Yeah.
And I think I don't know if you have that. I tried to send to you this morning, perhaps too late. But in the FAQs, there's actually a very good example of how that penalty is calculated. Yeah, here we go. Absolutely. Now, this is interesting because I think it reveals a great deal of what they're going after. And again, this is not, it is very clear to me, actually, and I'm thinking about getting ready for this morning here, Anthony. It's very clear to me that these are not general tax amnesty programs at all. What these are amnesty programs related to the non-reporting of FBAR and information.
Yes. Yes.
They really are.
Right.
And we see this coming through very, very clearly in this FAQ. So why don't we go over this? Because as I was reading this, what was going through my mind was, John, I got it. Okay, this is not general amnesty. This is about, foreign, information return omissions.
Right.
Things
That's
like
about
that.
penalties, right? It's about foreign information return penalties. That's what it's about.
How do I calculate the 5% penalty? Okay, so begin by identifying the assets included in the penalty base for each of the last 6 years. Why 6 years? Because remember that Streamline requires 6 years of FBARs, right? Now, these assets include, for each of the 6 years in the covered FBAR period, all foreign financial accounts as defined in the instructions. So in other words, if it goes on an FBAR, then it's part of the thing, which the taxpayer has a personal financial interest that should have been was not reported. Notice that says personal financial interest. That specifically, and this is another FAQ, would not include an account that you had signing authority over as
Right.
a
Not signatory, right?
or something like that. So that's important. Okay. Next, for each of the 3 years covered in the tax return, all foreign financial assets as defined in the instruction form 893A, in which the taxpayer has a personal financial interest. Now, how are those different? Wish I thought of this earlier, but the IRS actually has a good chart talking about the difference between FBAR and 8938.
Oh, yeah.
And anybody can find that easily. But the point is that the FBAR is focusing on mainly signing authority, or as they would define it, the ability to control the disposition of the funds. For 8938, though, that would include a lot of assets, like pensions, for example, shares in a private corporation, all this kind of stuff. And so then what you do is you identify the assets, right? So here we are. They were not reported. So we have a list here. Then what we look at, and we say, were these reported on an FBAR? Were they reported on 8938? Okay. Now, if they were reported, we may be able to remove them from the penalty base, except for if it was reported, but it generated income which was not reported, then it comes back into the penalty base. Okay. So what this really is a hunt for foreign financial assets, meaning FBAR 8938, that either were not reported at all, or if reported, the income generated from them was not reported. So you take those things, you go through each of the 6 years, you total up all these values, right? It could easily be, a ton of money, or you take the high. See, at this moment, I'm not sure whether you total them all up or whether you just take the highest one in each of the 6 years. Okay, I'll leave that to you to figure out.
Yeah.
But okay, but I mean, that's just a procedural thing. But the point is that once you've determined the highest balance, okay, the highest value for each of the 6 years, you slam a 5% penalty on that. So, I mean, the stakes here can be extraordinarily high. Okay, and I remember while OVDP was still around, there were instances in which OVDP was preferable, okay, because it was an abatement, it ended up being less costly, okay, than this particular thing. So it was highly circumstantial. But this is the analysis that you got to go through, and you can see why. And then I want to add, okay, that there's obvious, although the way the eligibility statement is described for each of domestic and streamlined, it's described in the same language. Make no mistake about it, they're going to be completely different, written in different ways, because for the domestic, you got the problem they filed but didn't include the stuff, right? Okay, which is going to require a lot more work, to get it, et cetera, et cetera. So, I think that this is an area where people a lot more, and also the longer this goes on, the harder it's going to be to meet the eligibility hurdle, I think. Okay, because, as this becomes generally, I mean, they've talked about, I don't believe they're going to do it, but, they've talked about getting rid of streamlining, saying, well, now people know about their tax obligation or something like this, right? I mean, the point is that their view is that, the more it's reasonable to presume people know about this, the less reasonable it is to use streamline, okay? And I think that probably is their attitude. And my view of this is I would try to avoid it if possible. And I think it often is possible. And, we'll sort of conclude again with streamlined if necessary, but absolutely not necessarily.
Yeah, it's not necessarily the thing. That's absolutely right. John, and here's my thought as we're going through this, and my concluding thought as we're going through this, that this let's think about what's happening here, right? We're trying to clean up tax non-compliance, right? And we've spent an hour and 7 minutes so far today talking about
Really?
one part of this process, right? One part of this process. It's so if you thought international taxation was difficult, wait till you see the solution. And that is the solution. Is not much of a solution to the world of way too much complication. The solution that the IRS gives is only complicated beyond. And it's just, again, demonstrating the complete absurdity of taxing people on things outside your physical borders. And yeah, nobody, and this is a great point. No one can know it all. When you need a PhD from University of IRS to keep up with every little detail. And I would say even there, you can't even keep up with it because things are constantly changing. And I'm even seeing, and there's a few tangents I could have gone on for. John and I probably could have gone on for 4 hours, by the way, while we're going through here. I just had to limit myself because we have things to get to. So that we have this, really, really crazy situation where U.S. tax, U.S. global taxation is far too complicated. And now we have the solution given as, hey, clean it all up. Wait a second here. So let's just look at, really the problem that you have is that we have we're trying to fix something that's really complicated with more complications. Yeah, they keep changing it too. So that's where I'm at. It's a pretty, difficult process here. And that's where, going alone might not be the way to go.
No, I think that this, I'm going to be really clear here. I think the people who try to solve these problems online, okay, I think it's worth talking to somebody who actually has done this stuff, etc. Yeah. And, when I think about this, having this conversation with you here today, 15 years ago, this stuff didn't even exist. But, 10 years ago, there was all this panic. And, I'd read this stuff, written by various lawyers and accountants. And, at the beginning, it's always confusing. And, I thought, well, that's interesting. And then, I thought, well, maybe they, I sort of presumed that, certain people had a kind of an insight into this. And years later, I realized they didn't at all. And it's sort of after all these years, the only thing I know only two things. The first is that I'm a permanent student of this, I guess, which I'm not particularly happy about. Permanent student. But the second is that, most of the stuff out there online is just a bunch of garbage. I mean, it's not anything, it's not helpful. And the fact that, people do this and don't get a penalty just means that, they didn't get a penalty. I mean, I don't know. This is far more complicated than people understand because
Yeah.
people don't understand it at all.
Right now, well, here we go. I'm afraid to say we need John for president as much as I don't want to insult him. So with that, if you are looking to get in touch with the great John Richardson,
Actually, I was thinking that Anthony and Keith should, run a ticket for president and vice president. What would you think about that, Mr. and Miss Siegel?
no, what I want to do is I want to totally discard, I want to totally light up and torch the US Constitution because the anti-federalists were exactly correct. The entire purpose of the US Constitution is to institute graft. That's what it is. It's to institute punitive taxation against your political enemies and reward your political friends. That's the entire purpose of the US Constitution. The anti-federalists were correct. The very first law passed in this country was the excise tax of 1791, which was a ruinous tax that was designed to punish the rural parts of the country and benefits Washington's buddies back on the East Coast. So that's really the problem. I wouldn't want to run for president because I don't believe in the US Constitution. I mean, it's the ultimate sales pitch. It's the ultimate sales pitch. How many years have we had this? Oh, yeah, this Constitution is going to protect this. Okay, let's just look at the U.S. history. Doesn't really seem to help too much here, has it?
Do you think either of the current presidential candidates believe in the U.S. Constitution?
Well, that's the thing, too. It's the Constitution isn't a great idea, and the ignoring of it is even a worse idea. Like, okay, look, the Constitution is bad, but it was a sales pitch. It was a sales pitch. Oh, but we'll put these protections in. So we won't be out of control. And then again, the excise tax of 1791 immediately torches the Fourth Amendment. Immediately does it. They put revenue officers inside your house and say, hey, how much whiskey you making?
Constitution, though. I don't even know. When did the Fourth Amendment come in?
That was 1789.
It was. All right, if that's the case.
That's 1789. And that came in with the Constitution. Say, oh, yeah, we'll protect your rights. We won't get out of control.
I read a really interesting thing. And this would be, I think, an interesting discussion, although it's not tax related. I have no idea if this is true, but this had never really occurred to me. But, you look at the electoral system, right, where it goes, delegate state by state, right? Apparently, this is directly related to, the whole slavery issue, right, in the United States. So it is simply unbelievable to what degree America's slave roots have, continued to exist through today and, created all kinds of, I guess you'd call them idiosyncratic constitutional dimensions.
There we go.
But I mean, really, it's, what needs to happen is that, you look at the, I can't remember the name of the decision, where the Supreme Court ruled that abortion was going to be a state legislative issue, right? I don't remember the name of it. The recent decision, in any case, that's upset everybody, that basically there's no constitutional right to an abortion. So they're going after, the conservative faction of the Supreme Court. I mean, isn't the real response to this that we need a different constitution, a constitution that, is somehow rooted in the 21st century and not, trying to solve or interpret all these problems, from the Constitution a couple hundred years ago?
Yeah, I'm not sure that would be a good idea. I mean, it's all, I mean, look, I mean, ultimately, does it matter? It's all, you know, they're just going to present something to us that's a lie. And we got to stop believing the lie. I mean, that's really what it is. They're always going to come up with, well, here's the thing that's going to protect you. Just go along with it. Just vote again. Just vote again. Next time we'll get them. I know we lost this time. I know we nearly had it. Next time, just vote again, vote harder, and the solution's going to be coming. So I think we're just, you know, where I'm at is I'm just like, I have no faith in the United States of America other than to be what the United States of America is since 1791, a criminal syndicate that won't admit to being a criminal syndicate, because criminal syndicates don't do that. They don't do that. They don't say, hey, I want to rob you, and I'm going to be open about it. That's the whole point of it. So we are a criminal syndicate with lip service that too much of us do, buy hook, line, and sinker. But that could be the solution to the problem, because all the BS we actually has, and this is what I say, has created a mythology of American spirit, but that mythology can be real. And so it was the sales pitch, you know, and I think this is that the sales pitch behind the Constitution resonated with people because they believe in it. And that was like, yeah, we know what we need to protect individual liberty. That's right. Yeah, yeah. Hey, yeah, the purpose of government should be doing this. And so we're sold on that sales pitch. We get something totally different. We get something totally different than we're lied to it. We're right to our face. Just again, you know, vote harder next time. There you go.
Yeah, maybe a simple way of viewing that would be, you know, some people see things because they believe them. All right.
Yeah. Well,
and others believe them if they see them. And because this America does not have a long history, there's an awful lot of see it because you believe it.
Yeah, there you go.
A lot of this whole notion that, you know, somehow American stands for justice, democracy.
Show me that evidence. How about that? Why don't you show me? Can you show me the evidence in the tax code? Right? If a country's values are reflected in its tax code, show me that evidence.
Well,
in the U.S. tax code, where there I see it.
So much of American history. I mean, certainly it can be viewed as an attempt to restrict and violate the rights of individuals, right? I mean,
entire purpose. It's entire.
You know,
purpose.
it really. I mean, I'm not saying it's wholly. I think that probably this is very much. I think it's Canada, the UK. I think that, you know, it's all these countries that are extensions of the British Empire, right? And you can see this in the tax treaties, you know, particularly. So I don't want to single out the United States, although it certainly is probably the big.
No, I will single out the
United States. I don't want to single it out. I think.
Well, all right, we got to go, but you know, and maybe we have another conversation on this one. But you know, again, the American system, and as articulated by Henry Clay, the inspiration for Abraham Lincoln, the American system is at complete odds with the British sense of liberty. American system. Hey, Adam Smith is a moron. He doesn't have it right. You know what? America first. We're going to make sure we punish our enemies and reward our friends. And oh boy, do they? You just oftentimes you didn't know you're going to be the enemy.
Does not believe in the rights and the dignity of the individual. That is for sure. But I think that's true of most great powers. I think it's hard to become a great power, you know, unless you can basically co-opt the energy of your citizens in a specific way. You know. We can make that a discussion. Another one we might want to consider while we're talking about compliance, though, is why the relief procedures, if available, are always by far the best. You know, maybe we'll make that.
All right. You know what? That might be the next one, because we should do the backup, because we're telling people like, hey, might not be the option. You know what? Let's give you the option. So let's hit that next time, John.
Well, one option, Anthony, is, you know, I mean, I hate to be such a simpleton here. Okay, actually, I pride myself in my simplicity and stupidness some days. But, you know, look, why don't you look at it this way? I mean, you know, the law requires you to do something. Why don't you just do it? Because the law says to do it, rather than get into, you know, how do I do it in this program and that program and this letter and that letter? You know, maybe you just, you know, file your tax return. I know it's a radical idea. Yeah. You know, obey the law, right? I mean, you know, that's also a possibility.
I got his some comments.
Punish you for obeying the law.
All right, I got to hit some comments before we go. All right, so Borchell, yeah, here's the whole point too. It's like the Constitution was kind of a bad idea to begin with, but now, I mean, and we're just detached. I mean, now we're just like, okay, it's a kind of a bad idea to begin with. And now, like, well, that bad idea, forget it. We don't even need it anymore because, to respect the Constitution, you need to be fully familiar, not just the words, but the history of the Constitution. And presidents for the past 3 decades don't fit that description. I would say the first president of the United States, actually, I would say George Washington immediately torched that Constitution, even though, it's like, yeah, no, it's going to be good. And now we'll just torch that Bill of Rights, which was included in the original Constitution so quickly, so easily. Let's see here. And then Jack Dack is asking, is anyone asking Kamala if she will give
Actually, Jack Dack.
Nice, interesting wording on that, Jack Dack. Will she give RBT, huh?
Well, actually, here's something that is important. So stay with me on this.
Okay.
Although this is not hidden, it's never discussed, is that Kamala Harris moved to Canada with her mother at the age of 12. Her mother was a professor at McGill University. Kamala Harris graduated from high school and did a couple years of college in Montreal, Quebec. All right. So in other words, she's living in Canada with an American citizen mother who's dead, but probably wasn't filing U.S. taxes. That would be my guess. Okay. But anyway, who knows? I mean, that has nothing to do with the character of the mother, by the way. That's just sort of, But it's interesting that if you look at the things she says she writes, there's never a reference, other than maybe a sentence, to that period in her life. And, I think it would be, while Ambassador Bruce Ham and his wife are out trying to, manufacture votes in Canada, hey, are you a Canadian vote in a U.S. election? I think it might be worth getting, Kamala Harris to understand this as an issue. She spent the age of 12? It sounds like about 19 in Canada. Those are pretty important years in somebody's life, aren't they? Anthony?
Yeah, I would say so. I'm just not sure exactly what she is. I don't know what exactly she is.
What do you mean you don't know what she is? She's the Democratic nominee for president of the United States.
Right. I would say, she got where she is by giving great non-RBT, something other than She gave great something other than RBT,
Okay.
right? Yeah, a little bit. Yeah, no, I actually think she is a CIA project. I mean, she looks like an MK Ultra a victim, and her husband appears to be her handler. And that's more or less what she was designed to extract evidence from Democratic politicians. That I think she was, she did her job, and she's doing her job quite well. Anyway, enough on that.
There's plenty of discussion of that sort of stuff in the forums.
Well, I did. You know what? I was thinking about this, John, because I do see a lot of people saying, oh, you know what? And this might be a topic we could hit because we can hit a lot more viewers. We might want to do this next week. I see a lot of people saying, oh, you know what? Kamala isn't eligible to run for president. And I would love to get your analysis on that. Because
I'll give it to you right now. That's absurd. She was born in Oakland, California.
Yeah.
What more is there to talk about?
What, right. Yeah. That is. Yeah. All right. I guess. All right. Well, there it is, guys. Hey, you just got an hour podcast in 30 seconds. There it is. She's born in Oakland, and a conversation. She's born in Oakland. Yeah. Sorry. That's the way it works. Right.
Maybe their focus should be that it's all a lie. But in fact, she was born offshore. Here's what it is. Was Kamala born offshore with a fake birth certificate so that she could run for president?
Ooh, yeah. Well, I mean, I don't put anything out of the realm of that.
I think she was born in Oakland, California.
I think she was probably born in Oakland, California. Probably, but I mean, I don't. But anything else?
Maybe the argument is that California. There's that saying.
It's a foreign country, right?
Everything that loose goes to California. Maybe the argument should be somebody born in California cannot be a natural born American. Maybe
there you go. There you go. That could be it. That could be it. All right, we got. Oh well, thank you, Maria. Thank you so much. Look at this. Oh, you're so nice, Maria. Thank you. I really appreciate that. All right. So if you're looking to get in touch with John Richardson, you have an international issue, you're looking to help, a citizenship issue you're trying to get to, you got to reach out to him at citizenshipsolutions@protonmail.com. By the way, Keith left. He had to take off. But if you are looking to reach out to him, you can email him at US_overseas_advocate@outlook.com. And if you are looking to get into compliance, if you are sure you need a streamlined disclosure, why don't we just act? Let's just get to, let's find out first if you really should do a streamlined disclosure, or if there's something else better for you. You can reach out, schedule a time to speak with us at irismedic.com/offshore. And I think what we'll do for our next one, John, this sounds really like the best one to do, is let's go over the other ways to get into compliance other than the streamlined disclosure program. And a lot of people in the United States would benefit from that, because if you can avoid that SDOP, that's a 5% penalty for sure. And we'd like that.
Oh yeah, 5% on what though? I mean, again, this is so personalized.
Yeah.
You know, I mean, I actually, it's so interesting because, you know, a couple days ago, you know, somebody, you know, called me up, sort of enter my life, you know, with this as a problem. I was being told, you know, well, I should do this, you know, streamlined domestic. I haven't seen this stuff, so, you know, but I just look, yeah, I would not presume that. Okay, you know, I think you need to dig a little deeper. It says.
Dig deep, right? Dig deeper. You got to dig a little deeper. That's exactly you know, what you need to do.
But on the other hand, Anthony, I mean, let's say that your asset levels are very low. Maybe then it would make sense to pay the 5%. You know.
Well, and also, and you know, when we look at, you know, when we have people with low low form, you know, hey, I had an account of $40,000 I didn't report, and I would say this, yeah, I better enter in the streamlined disclosure program. Okay, well, yeah, we can do it, but you're going to be entering, you know, you're going to have to give this non-willful, you know, eligibility requirement statement, and additionally, there's a cost associated. But when you look at, and this thing, when you look at your penalty exposure, you got to look at your penalty exposure, because on FBARs at low amounts, you'll see that even if you're willful, if you apply the penalty mitigation guidelines, that is, you cooperate during the audit, your penalty level is incredibly low, where you're like, well, why are you going to do this thing? And again, this explains why you need to dig deep and to really see, not assume that Streamline is automatically answer to what you're doing. So
yeah, look, the short answer is, okay, you know, yeah, dig, but dig.
Whoa. Hang on.
Okay.
What's this Jack Dack? Jack Dack's latest comment. Who are we talking about there? Are we talking about my friend? Jack, let me know. Are we talking about my friend? Because oh boy, I have a story about him. Let me know, Jack Dack. And by the way, and anyone who wants to email Jack, if you could email me anything on that. Anyone has a great show idea for me, I want to share my email with you, aparent@irismedic.com. So Jack, if you could tell me exactly what you're talking about there. I think I know who you're talking about, but I'm not entirely sure. I would want to check in on that, because I do have a few personal stories to tell. So let me know. Really appreciate that. All right. Well, with that, I'll let everyone go. John, I want to thank you so much for your insight today. And let me see what Jack say. Oh God. Oh my God, Jack Rack. Oh God, we absolutely have to do it then. Oh my God. Jack Dack. Yeah. This is somebody, we will have to do this. The rise and fall of this individual. I can't think of his name right now. Castro and Company. This is crazy. He negged my IRS medic. He paid for fraudulent negative reviews. And I know it's him, and I know it's him, and I've contacted him about it, and he knows it's him. So John, here it is. Yes, it is. John Anthony Castro. Wow. Oh, you know what? This is also what he did. He knew I was a Republican, so he contacted my town's Republican national town committee to say what a scumbag I was. And my buddy runs the committee. He goes, Anthony, do you know who this John Castro is? I go, wait, I do. Why is he contacting you? He goes, yeah, he's saying all this stuff about you. So there he is in jail. He gave some of the dumbest advice out there imaginable. And I called him out on it. So this is the problem you get. Well, I guess. So
the issue.
Oh my God. All right, we'll have to get to that one. Oh my God. We'll have to get to that one. Okay, Jack. Thank you so much.
Yeah, leaving aside the personal stuff on that wasn't the issue there.
the treatment of whether superannuation was Social Security or something. Wasn't that the issue?
Yeah, and he did the dumbest thing imaginable because he said, "Well, yeah, I'm going to take a treaty position that Australian superannuations are Social Security," which I see the argument. I know the argument. Okay, all right, yeah, actually, I see the argument. You can go through.
We talked about that.
And we talked about it, but then this is what the dummy did. This is what the dummy did. He then took a treaty-based position and filed Form 8833, claiming that, hey, all of my clients are going to take a treaty-based position that Australian superannuations are Social Security. Well, here's the thing: the Treasury regulations specifically exempt having to take a treaty-based position for a Social Security position. So you took a risky position to a degree, but then you did the dumb thing by saying, hey, look at this risky position I'm taking. And now the IRS is alerted to what a moron you are. So now they're going to go after your clients.
I wouldn't be so sure they're alerted to anything, Anthony.
Oh, that's true. Right. Yeah. Yeah.
No,
Right. Potentially.
Just so. I think the regulation says you're not required to. I don't think it prohibits filing. I think it says you're not.
Well, right. You don't, but why do it? Because
I'm not in favor of doing anything that's not required.
Right. Don't overfile. And that's, in order to be cute, in order to make his, here's my rock solid position. And he was going out there and he was out there. So there he is. Wow. I got to take a look at that. That's going to be something very, very interesting. Thank you much for that update, Jack. I thank you all. And I really do appreciate our audience. Thank you all so much for participating. All right. So until next time, we will cover the delinquent information returns, how to handle those both for FBARs and information returns, and to give you options to streamline. That's going to be the topic. Options to streamline disclosure. We'll go over those. And then I guess I will have to look a little bit more into what my friend John Anthony Castro has done. Often, by the way, he was always presenting himself as an attorney, and he wasn't licensed to practice law. He might have become later, but I know that he was one point was claiming to be a lawyer when he wasn't. He might be.
Oh, Anthony, all of us went through periods in our lives where we weren't lawyers.
That's true. I guess so. Right. And we all weren't.
You did.
Oh, I did. Yeah, but I didn't say I was. So that's the thing.
You didn't.
All right. I didn't go as far to say that.
Well, did you walk around saying you were not a lawyer?
I did not. All right. Yeah. So my sin was guilt by omission. IRS logic, right? If we apply IRS logic, I willfully did not disclose I was
You
not.
think that there ought to be a requirement in the United States? Everybody has to wear a T-shirt that says "I'm a lawyer" or "I'm not a lawyer."
I'm a lawyer, right? We should disclose. Yeah, it's a warning to the public, I think, right? It's our duty. All right. Well, thanks again. We'll see you next time.